Thank you, Madam Chairwoman. A couple of questions, Commissioner Leary. You stated a number of times that the legislation would restrict banks and would make state banking irrelevant. I don't think that's an accurate description of legislation. The legislation doesn't do anything to affect the operation of the bank. Nothing. The only thing the legislation deals with, well, I'll ask you, maybe you could point out specifically what it does to restrict, because mainly what we're talking about is ownership at a holding company.
I would answer it this way, sir. In our case, we've approved 3 charters that the FDIC, under its moratorium, has not been able to successfully approve. We would not have approved those charters if we did not believe they warrant the granting of the charter and warrant the granting of deposit insurance from the entities. I believe that what we have developed is a safe and sound model.
Well, I guess the other thing I'd like you to do, since other state chartered banks and other banks are subject to these same rules, do you think those rules restrict them? I mean, why would it only restrict ILCs?
I would probably take a tack that I've developed in my own logic trail over the years. What I believe we're doing with a number of these companies is when they've been identified as commercial entity, I do not see it much differently than the majority of my community banks that are primarily owned by business people in the community, whether it's the lumber operator, the gas station owner, or whatever. So they bring with them a specific commercial expertise and a commercial perspective. I think that's very similar to what we're doing with some of these companies. Do we want to isolate that and provide safety and soundness mechanisms? I believe Regulation 23A and B does that, and for the ILCs, we religiously enforce that upon them. So my answer is, I think there is conceptually, it's not far to go from business people owning a community bank to an entity that is large that has a small component, which is an assured bank. I hope I've answered your question.
Well, I think we just have a different philosophy. For example, you said that restricting commercial ownership of ILCs would be anti-competitive. Do you think the Bank Holding Company Act is anti-competitive?
No, but I think I've already gone on record as saying I think there's some areas that could be worked at. Do I endorse repealing? No.
You don't endorse repealing?
I do not.
But you don't want ILCs subject to comparable type of provisions?
I think they are. Everybody keeps talking about the one side, but the ILCs are limited. They cannot have demand deposits if they exceed 100 million. I brought up in my remarks that at one point the committee passed a bill that would allow commercial now accounts for ILCs, somewhat leveling the offerings that the industrial banks can offer to their customers. So I think it's a very delicate balance, but I do not have a problem with what we're doing here, provided it's safe, provided it's sound.
Okay, thank you. Let me ask SEC, because there's possibility under this legislation that you're going to be a consolidated regulator. If you were given the power to regulate industrial bank parents, depending on what kind of parent it is, do you think SEC would have to request additional powers to provide for safety and soundness, or are you equipped now to do that?
I believe that the program that we're currently operating can take into account the needs of the ILC, because the possibility that what happens in the ILC could affect the holding company. So I don't think it need more safety and soundness power, but if the Congress decides that that's something that's appropriate for the bank regulators to have, we wouldn't oppose it.
Let me ask Mr. Kohn. Mr. Leary talked about it would be okay, in his view, to repeal the Bank Holding Company Act. Would you like to make the other case?
I think I already did, Mr. Gillmor, and I will just repeat that I think the mixing of banking and commerce would be a very major step. The U.S., Mr. Baucus cited two German firms that operate in a country in which banking and commerce have been closely integrated over the years. I think the U.S. financial system has benefited considerably by having these two separate. We have a much more resilient financial system in which commercial firms have many avenues for raising funds. They're not tied to their banks. And as a consequence, I would tread very, very lightly on moving away from a formula that has given us, I think, a very a safe banking system, a resilient financial system, one in which, of course, there are always difficulties and conflicts of interest, but have stayed away from some of the difficulties that could arise if we mix banking and commerce. I don't know that the answer is zero banking and commerce, but I think I would be very cautious about moving away from what Congress just looked at 8 years ago and made a very conscious decision that zero was the right number.
Thank you very much. I was going to throw a softball to Chairman Bair, but my time's expired, so I yield back.